for the last few years, Entrust has done an analysis of our real estate investors. So we've taken all the data that we have in our database for our individual retirement account investors who have used their retirement accounts to invest in real estate and done an analysis on it. I think this is the 4th year in a row that we've done it. So we're going to be looking at 2007, what we ran for 2017. The report just recently came out, which everybody who's joining this will be receiving a copy of that report. But we're going to run through some of the analysis that was done, and then at the end, we're going to take questions. So feel free to type all your questions into the little chat box there, and then I'm going to run through them all at the end of the presentation. So here we go. For those of you who attend this webinar, we always put this up. Entrust we are not financial advisors. We don't give any advice or recommendations or sell any particular investments. We provide the administrative and custodial services for self-directed retirement accounts, which are retirement accounts that you make all your own investment decisions without the help of Entrust, and you can hold non-traditional assets. You can hold other investments besides just stocks, bonds, mutual funds with an account with us. So this is the agenda. Give an overview of Entrust for those of you who haven't been on this before. What exactly is a real estate IRA? What are the different investment options? And then we're going to get into the analysis we did, the real estate IRA investment trends, a section on how real estate agents can grow their business through real estate IRAs, how to get started, and then again the Q&A. So like I said, feel free to ask any questions in the little box down there, and then I'll get to them at the end. So as far as Entrust is concerned, we've been in business since 1981. We have about 21 to 22,000 account holders currently. We currently have about $3.3 billion in investor assets. And we focus on education. So any of these webinars that we do, we're not ever selling any investments or promoting any particular investments. We're educating you about self-directed IRAs and the different investments that you can hold inside them. We are the only company in our space that has been certified to provide a continuing education class. We have one for realtors. It's a 2-hour, 2-credit class, 2 CP credit class. We also have one for CFPs and for CPAs. Those are classes that, or at least the real estate class, are done in person. So for me in California, if anybody here is in California, if you're a realtor and your office, or if you're part of a real estate association that might want me to come and do that 2-hour, 2-credit class, we don't charge for it, but you do have to invite me. So if you want to put something like that together, reach out to me. You'll get my email address at the end, and we can set something up. So what exactly is a real estate IRA? So there is no type of IRA called a real estate IRA, just as there's no type of IRA called a self-directed IRA. The types of IRAs are traditional IRA, a Roth IRA, and if you're an individual, and if you own a business, you have a SEP and a simple. And also you can have a 401k that can be self-directed. We have an individual 401k plan. We also have health savings accounts and Coverdell educational savings accounts if you want to self-direct those. All of those can be opened and self-directed into whatever you want to invest in, including real estate. So real estate, when you hear the term real estate IRA, it's more of a marketing term promoting the idea that you can invest in real estate inside an IRA. So really, for a real estate IRA is just simply an IRA that invests in real estate. But you still have to choose a type of retirement account that you want to hold. As far as investment options, here's a list of just some of typical assets that we hold. Single-family, multifamily homes, commercial property, land. A lot of people invest in LLCs, other private placements. You can invest in startups, hedge funds. People have recently been investing, for like probably a couple of years now, investing in cryptocurrency. Really pretty much anything you want. We had somebody, if you've seen my webinars, I say this every time, we had somebody invest in a racehorse with us one time, in cattle, in a bowling alley. As long as it's for investment purposes, you can invest in pretty much anything that you want. It's easier to give you a list of what you're not allowed to invest in, which I thought was going to be the next slide, but it's not. The only things you're not allowed to invest in inside an IRA are collectibles, life insurance, and S corporations. That's it. Aside from that, if you want to make the investment, you're allowed to do it inside your retirement account as long as you're not creating a prohibited transaction and self-dealing. When investing in real estate, it's the retirement account itself that is the entity that's buying the property. So title of the property is held in the name of the IRA, which means the contract, closing documents, and title is with us. It's the Entrust Group for benefit of, or just shortened to FBO, the Entrust Group, FBO, your name and your Entrust account number. That's the entity that owns the property. That's the entity that receives all the income. That's the entity that pays all the bills. Probably guessing that a lot of you have probably seen our webinars and are aware of this, so we're repeating it, but it's good information to know. If you're going to buy real estate, make sure you don't do anything that's considered a prohibited transaction, which typically involves a disqualified person. For example, you can't stay in a property that your IRA owns, nor can your spouse, your ancestors, your lineal descendants, nor can you work on a property, nor can your spouse, your ancestors, or lineal descendants. They're all considered disqualified persons. You can't buy a property from a disqualified person. Your IRA can't sell a property to a disqualified person. And that's what really so much what this is about. We're going to get into an analysis, but it's always good to repeat that information. Since the retirement account is the entity that owns the property, all income and expenses have to flow into and out of the account. And if you have a property manager or there's any work that's being done, that has to be paid by the retirement account. Again, the account is the entity that owns the property, so the account is the entity that's responsible for all the expenses. The account is the entity that receives all the income. All right, there's our latest cover for our 2018 Real Estate Investor Market Research Report. For those of you who are familiar with San Francisco, that is Alamo Square neighborhood was where that picture was taken. And a little fun fact, I used to live about 2 blocks from there. All right, where do investors buy real estate? So this is in 2017. Again, this is Entrust clients, Entrust account holders who use their IRAs, their retirement accounts in 2017 to purchase property. And there's where the majority brought theirs, or at least the top 10. California for us is number 1, which is we have our largest percentage of account holders in California as well. So probably lines up pretty consistently with that. But you can see some other states where people are investing: Arizona, Florida, Texas, Indiana at 6%. It's good cash flow. I have a property in my IRA in Indiana that I bought a handful of years ago. So you can see there's a lot of the Midwest, and then Florida is always a very popular investment place. Kansas is interesting to me. Idaho is becoming a more popular place to invest in real estate. But anyway, there's where it is. From a regional standpoint, you can see from what we had in 2016 to 2017, investing in the West dropped off a little bit and increased in the Midwest pretty much for the 4% that are no longer investing in the West are now investing in the Midwest. In terms of people investing in the state in which they live, you can see that Florida, Arizona, Georgia, North Carolina, most of the people are investing in the same state that they're living. You get down to California, where a lot of our investors live in California, but you can see only 52% are actually investing in California. They're investing out of state. And pretty much anybody who lives in California or is aware of California real estate prices probably can figure out why that is. It's pretty expensive here. So it's tough, particularly if you're in a buy and hold situation where you're going to buy property and rent it out. It's tough to get your return on investment in California from a cash flow standpoint. It's more about appreciation. Whereas some of those other states you can get pretty good cash flow. In 2017, the average purchase price for a property was $174,000. That's actually down from 2016. And that's going to be driven by where people are purchasing their property. I mean, if we have less people that purchased in California than purchased in 2017 than did in 2016, and instead put the money in the Midwest where the the housing prices are not quite as expensive, and that's going to drive the average purchase price down. So I don't think this is a reflection of national pricing of real estate so much as where overall people in you saw the 2016, 2017 in the previous slide that switched 4% went from the West to the Midwest. That's going to drive down purchase prices a little bit. What are the most popular types of real estate that purchase inside an Entrust IRA? It hasn't changed very dramatically. Single family stayed pretty much the same. Multifamily dropped pretty significantly. Vacant land stayed pretty consistent. Commercial went up a little bit. And then we've got more people who are using their IRAs to lend money by using deeds of trust or purchasing real estate mortgages, went from 0.3% to 3%. REITs, I don't know that we tracked that very well in 2016, but that's a little bit. And then tax liens, and then international stayed pretty consistently. The thing with international real estate that makes this a tough analysis, I'm just going to throw this out there, is that a lot of people who are investing in international real estate must set up an entity in whatever country that they're going to invest in, and that entity has to invest in the real estate. So it's like an LLC in most countries. Sometimes it's a bank trust. But within our database, we're going to show that transaction as an investment in an entity as opposed to in real estate. So when we show 0.3%, that's investing directly in real estate internationally. And there's probably actually more than that that's being held outside the United States. But unfortunately, because of how it must be bought in most countries, that you have to create a local entity like a corporation or bank trust. In our database, it's going to show as an investment in like a private placement as opposed to real estate. So it's tough to get a measure on that. Types of IRAs used to purchase real estate. So traditional IRAs are the most, that's the most common type of retirement account that we have. So it just is probably going to make sense that majority of people are going to use their traditional IRA. Most of this information stayed pretty consistent. It hasn't really changed very much, and frankly, I don't see that. This probably lines up pretty well with overall what our account holders, the types of accounts they have with us. It's probably in the 70 to 75% range of all our account holders actually hold traditional IRAs. Same with Roths and SEPs, beneficiaries, etc. Where they sell real estate in 2017. So the majority was bought in California in 2017. The majority was also sold in California in 2017. And I think most of these states are pretty consistent with where we saw the purchases in 2017. But there are some ones. Notice Idaho is not on here as far as where it was purchased, but Texas, California, Florida. Very popular real estate places. Illinois, Indiana. I think probably going to see that on a pretty consistent basis as we continue to do this on an annual, every year, put this report out. So regionally, where did the majority of people sell their property? In the West, it stayed pretty consistent from year to year on a regional standpoint. You can see again for people who live in the same state in which they also purchased rental property. Arizona, 84% of the people who sold property in Arizona live in Arizona. Florida, 77%. And again, you get down to California, people are selling their property in California, 67% live in it. And if you recall on where the investors who purchased property live, the people in California who also bought property in California was only like 52%. So we're seeing a higher percentage get sold in California of people who live in California, taking advantage of the high prices while it's still there, I suppose. Types of real estate sold, single-family residence went down a little bit. So in 2016, it was 59% of all real estate sold. 2017, it dropped to 50%. And we saw an increase in vacant land, surprisingly, get sold. Multifamily stayed pretty much the same. All the other ones stayed pretty much the same in what we had seen in 2016. Types of IRAs used to sell real estate. Traditional IRA went up 10% for some odd reason, whereas the Roth IRAs dropped from 2016 to 2017 for where the what types of accounts used to sell the real estate. Now this is calculated on a return on investment. This one was interesting to me. So what we did is in all the properties that were sold in 2017, we went back and did analysis of when they were originally purchased. And so what was the average purchase price when it was purchased, and what was the average sales price of the properties that were sold in 2017. So in this average purchase price, I mean, you have everything from properties that will go back probably years ago to properties that were purchased maybe in the same year or just last year for fix and flip type situations. But you can see that the from a rate of return standpoint, like the South and Florida in particular had the highest return on investment. Now, it doesn't show on here, but I went back to ask where we, like how many properties went into these calculations. So in this case, Florida, that's 37 properties that are making up that figure. For Georgia, it's 12 properties that make up that. California is 151 properties that went into calculating that 110 average purchase price and average sales price of 136. Colorado is 9 properties. Montana, I'm sorry, is 12. That should be MT, not MO. And then Arizona is 22 properties. So that's kind of that. I mean, that's it for the analysis. There's more to the report whenever we send it to you, but we sort of pulled some of the specific slides from it and just went over that. If you have any more questions, obviously type them in the box and I'll come back to them. This is specifically for real estate agents. We tend to get a lot of those on these webinars. How can real estate self-directed IRAs help you grow your business? Well, you're going to find that a lot of your contacts and people that you work with that might be looking for investment property aren't aware that they're able to do it inside their retirement account. So how you can grow your business is just by simply making them aware. If people are out there looking for investment property, make them aware that their IRA can be a part of that process, that their IRA can be an investor in that process if they're looking to do. And again, it just has to be for investment purposes only. It can't be a property that they plan on using as a vacation home or a second home or anything like that. So it gives you the ability to maybe sell more property to your existing client base that aren't aware that they can use their retirement accounts. It gives you the ability to stand out from your competition. Even within your industry, the real estate industry, a lot of realtors don't know about using an IRA to invest in real estate. So it gives you a little bit of a leg up on that. And just brings more to your relationships with your existing client base. And hopefully close more sales and sell more properties. As far as the process to invest in real estate in an IRA, or any other investment, it's really straightforward. Open an Entrust account. We have an online portal that you can go to the entrustgroup.com, click Open New Account, and you'll have an account open in 10 minutes. It doesn't take very long. Then to fund your account, you either transfer money from an existing IRA, that's an IRA to IRA transfer. You can do a rollover from a 401k or a 403b or a pension plan or any other kind of qualified plan. Transfers and rollovers are ultimately going to result in the same thing, that money is going to transfer roll over from your existing account. But if it's coming from an IRA, it's a transfer. If it's coming from a 401k or other type of non-IRA account, it would be a rollover. And then you purchase the investment, which involves instructing Entrust, your custodian, to process the investment on behalf of your IRA. So for real estate, you would have to send us the contract for review and signature, the contract being made out in the name of your IRA. All the closing documents flow through us to review and process. We sign the documents on behalf of the IRA, and then we send the money to wherever you instruct us, to escrow, to the seller. However it's being done, if you're doing a promissory note, you would submit the note with the IRA as a lender. We would then send the money to the borrower, et cetera, et cetera. It runs through us to process through your IRA. Okay, now is the time that usually is the longest part of this, which is the questions. There's my contact information, so if in the course of this, if you decide that you want some information or need to reach out to me, there's my phone number and my email address, so don't hesitate to call or email. Okay, first question. If I buy with a Roth IRA, would I be able to live in it? No. You are a disqualified person. You can't ever live in a property that's owned by your IRA. Well, let me rephrase that. Would I be able to live in it? If you live in it, if you want to live in it, sure, you can just take the property as a distribution to you. Once you move into the property, that in effect is distributing it to you. So you just have us distribute the property to you at the fair market value at that time, and now you're free to live in it. And if you have it in a Roth IRA, as long as you've had a Roth account for at least 5 years and you're over 59.5, you can move into it and take that as a distribution with no tax consequences because, as hopefully most of you know, a Roth IRA grows completely tax-free. So you would be able to live in it, but it's no longer held inside your Roth. It now becomes your personal possession and gets distributed to you. How do I make money if I transfer over from my principal investments IRA? How do you make money? By investing it. I guess I'm not really entirely sure of the question, but people grow their retirement accounts by investing it. So if you find an investment that falls outside the traditional stock bond mutual fund market, then you need to have your account with a company like Entrust, a self-directed company who's willing to hold non-traditional asset, who's willing to hold other things besides stocks, bonds, mutual funds. So you make money by investing it in whatever you think is the best investment to grow your account. Next question, can I act as my own property manager? There is no rule that requires you to get a property manager. So from a standpoint of, in terms of acting as your own property manager, can you decide, like can you interview the tenants and show the property to the tenants that you want to rent it out to? Yes. If there's work that needs to be done, can you decide, can you hire the people to do the work? Can you go to the property and see what work needs to be done and then hire the contractors to do the work? Yes, you can do that. You can't do the work yourself. You can't live in the property yourself, but from a property manager standpoint, those are a couple of typical responsibilities. What you can't do as a property manager is you can't receive and hold the money that's owned by your IRA for the asset, for the property. That money either has to be held by a third party, a non-disqualified third party, or it has to come directly to Entrust, right? So a lot of times property managers, one of their roles is to receive the rental income and then deposit it and take their 10% or whatever the property manager charges and then send you the balance. You can't physically hold the money. It has to go directly to the IRA, or it has to go to some other non-disqualified third party to hold the money on behalf of the account, but you can't personally hold it, right? The other thing you can't do is you can't pay yourself. So if you are a property manager, like if that's a profession that you have, and you want to, be property manager in your property and have your IRA pay you for that, that's not allowed. You can't pay yourself. Your IRA can't pay yourself to be a property manager. Can my wife and I have a joint self-directed Roth IRA? Do they have to be separate accounts? They have to be separate accounts. An individual retirement account, the emphasis on individual, is associated with one Social Security number. You can name your spouse as the beneficiary of your account, but you each have to have your own Roth IRA. Next question, in commercial property, is a NNN lease considered as not needing a property manager? That has nothing to do with IRAs. I don't know the answer to that question. How much does it cost to set up a self-directed Roth IRA with Entrust? Our fees are on our website. I get fees questions a lot on here, and instead of just repeating myself, if you go to our website, you can easily find our fees, and they're all detailed on there. So even if I could buy the land from someone using cash held in another of my IRAs, I can't later sell the land to myself in exchange for non-IRA cash to replace the land value back into my IRA. That is correct. You are not allowed to do that. You can take the asset as a distribution, or you can sell the asset to another non-disqualified third party, but you can't sell it to yourself, right, because you're a disqualified person. Next question, does my self-directed Roth IRA need to be an LLC? No, it does not. So you will get some companies in our industry who will tell you that in order to buy real estate, you need to create an LLC, and that may be how they operate, that the only way they are willing to allow you to buy real estate inside your IRA is through an LLC. But the IRS doesn't say that. You're allowed to hold title directly on a property in your IRA, or you can have your IRA invest in an LLC, become the single member of an LLC, and then have the LLC buy the property if you want. With Entrust, you have a choice. You can do either one of those. The advantages of doing it through an LLC is it gives you checkbook control because you can be the manager of the LLC, and as the manager of the LLC, you open the bank account, we would fund your LLC bank account, and then the LLC would become the entity that make that purchase, and you as the manager of the LLC have the ability so since the LLC is on title, the LLC receives the rent, the LLC pays the bills. It's still IRA money, but the LLC is being used as a pass-through entity that gives you checkbook control, right? So if you want to have checkbook control, you would have to do it through an LLC. There's no company in our industry that's just going to hand you checks for your IRA and say, go crazy, write all the checks you want. But it's the difference between your IRA holding title directly on the property or the LLC holding title directly on the property. And again, you're not required to have an LLC. If you have a custodian who's telling you that you have to have an LLC to hold the property, that's because that's how they choose to do it. That's their business model. But there's nothing that says that you have to do it that way. Next question, over what time period these returns were calculated? It's a good question, and I don't know. For our marketing team who did that analysis, I imagine it for some of them it probably goes back years. It's basically any property that was sold in 2017, we went back and we calculated what was the original sales price from the time they bought it. I mean, I actually don't know how far back like the oldest property goes, but it could go back years, or it could be more recent than that. Next question, do property managers need to have any specific license or certification before you can pay them for their services? So if you as the account holder send us an invoice for a property manager to pay from the retirement account on a property that's held by your retirement account, we're going to pay that invoice because you instructed us to. If our account holders, if the individual account holders want to require a specific license or certification before they hire that property manager, that's up to the individual account holder. But Entrust does not make that call, right? We're simply providing the administrative, we're our custodian for the account and providing the administrative services, which means we take our instruction from our account holder. And if our account holder tells us to pay a bill, pay an invoice that's associated with their property, we're going to pay that invoice. Next question, did I understand that an individual cannot use IRA for real estate as a second home? You did understand that correctly. It has to be for investment purposes only. If you use your IRA to buy property, it is not allowed for personal use. It has to be for investment purposes. So you can't use it as a vacation home, a second home, or primary residence, obviously. Now, bearing in mind that it's not like Entrust has a camera up on that property to make sure you don't ever use it. I'm telling you what the rules are, and the rules state that any investment that you do in your IRA has to be for investment purposes only. It can't be for personal use. You, your spouse, your ancestors, your lineal descendants, and spouses of lineal descendants all are prohibited from using that property or working on that property. Now, if it gets determined that you committed a prohibited transaction such as you used it, you stayed as a second home, if the IRS finds out, or even if Entrust, if we become aware of it for whatever reason, if we start getting mail from you or you change your address to reflect your rental property, if it's determined that it's a prohibited transaction, your entire IRA becomes disqualified and it gets distributed to you, and then you're subject to tax consequences and also potential penalties depending upon what age you are. Can I sell personally held property to my IRA? No. That's a prohibited transaction. Your IRA can only buy a property from a non-disqualified third party. You are a disqualified person. How long does it take to make a purchase of real estate? I mean, for us to review and sign the documents, it's a 2 to 3 day process. It doesn't really add much time to the closing process. I mean, most times to close on a home it takes weeks. The only difference is that when doing it through an IRA, the only difference is that the documents have to be reviewed and signed by Entrust on behalf of the IRA. And so from the time we receive the documents to turning around is typically a 2 to 3 day turnaround. So, whatever time it takes to close on a property, typically we don't really add any time to that. What is the difference between an IRA and using a solo 401k? Well, first of all, a solo 401k, you have to be a business owner to have a 401k. And our 401k is an individual 401k, or as you described it, a solo 401k, which means it's only for business owners, their partners, and their spouses. IRAs are different than 401ks. They fall under a different place in the Internal Revenue Code and the tax code. They have different contribution limits. So 401k is a qualified plan, and IRA is an IRA. So there's differences between those types of accounts. But in terms of making your investment, there is no difference. Your IRA can hold real estate or precious metals or private placements or promissory notes. Your 401k can hold real estate or precious metals or private placements or promissory notes. There's no difference from a standpoint of what you can or can't invest in. But there are differences between IRAs and 401ks. And as far as which one's best for you, I encourage you to discuss that with your CPA. Next question, can I roll over a 401k with my current employer to a traditional IRA? That's what's called a in-service withdrawal or in-service distribution. Some 401k plans allow it, some do not. It depends upon your employer and the plan that your employer has with their custodian. You would need to talk to either your current plan provider or maybe your benefits person with your company and ask them if you can roll over while you still work for the company. If you want to sound smart with them, tell them you want to find out if they allow for an in-service withdrawal, or also termed an in-service distribution. Can I take a commercial loan for my business and put that real estate in my IRA, and what would be the benefits of that? Well, you can't just put real estate in your IRA. Your IRA has to buy real estate, right? So you have to have cash in your IRA that buys real estate. Now, your IRA can borrow money. So your IRA can go out and get a mortgage and borrow money and then use the cash in the IRA to buy real estate. But can you personally take a commercial loan for your business, go buy a property, and then just shove that property into your IRA? No. Your IRA itself has to be the entity that buys the property, and the IRA has to have the cash inside the account to borrow the money, or the IRA itself has to be the entity that borrows the money. Next question, how do you see if a client can roll over funds from their employer 401k plan and self-direct into real estate? Well, I just answered that. Call the plan provider of your 401k plan, or call your benefits plan administrator. Again, in-service distribution. That's what the plan has to allow for in order for you to roll over while you're still working for the company. By the way, some companies allow for, they'll have certain triggering events that allow for a withdrawal from the account. A typical triggering event is that you leave the company. But some companies also have an age-based triggering event that if you reach the age of 50, or maybe if you're vested for a certain number of years, then they'll allow you to continue to work for the company while doing rollovers. So you want to find out what your plan allows. And you could also go back and look at your plan documents. Like when you opened a 401k, they provided you, or at least gave you access to your plan documents. If you want to, if you're of that, type that likes to do that, go read your plan documents and see what it says about an in-service withdrawal, or see if it has any mention of triggering events that allows for you to make an in-service withdrawal. Okay, if I open a checkbook IRA, no documents regarding the purchase or closing sent or reviewed by Entrust, correct? Right. Once your IRA funds the LLC becomes the entity that's buying and selling any investments held within that LLC. So we're only processing the investment into the LLC. Now your IRA owns that LLC. Any investments that the LLC does, well, that's up to you. Now, you need to make sure that you're not doing anything that's considered a prohibited transaction, because if you do, you're putting your entire retirement account at risk by doing that. But you are correct that once the money's in the LLC and the LLC is the entity making the purchases, you don't have to run any of those documents by Entrust. We're not reviewing those. Next question, if I set up an LLC and purchase a commercial property, can I then lease it to another company LLC? Sure, as long as that other company isn't owned by a disqualified person. So you can't lease it to another company that you own personally, for example. That would be considered a disqualified person, a prohibited transaction. But sure, an IRA, I mean, once you buy the property, I mean, the objective is to make as much money on it as you can. You want to try and grow your retirement account. So if leasing it to another LLC is the best way to grow your retirement account and make money on it, then feel free to do that. Just make sure you're not leasing it to a disqualified person. And person here can be an entity. A company owned by yourself, that company would by definition be a disqualified person. So you can't lease it back to your own company. What happens to the cash generated by the property? Well, it has to flow back to the IRA. So the IRA owns the property. The IRA has to receive the cash. Once it's back in your retirement account, it's up to you to decide what you want to do with it. You can invest it into something else. You can take it out as a distribution, or you can transfer it back to a different custodian. We don't invest it without you instructing us. So it's going to sit in cash until you tell us what you want to do with it. So he had a follow-up question that how do I invest it? I mean, decide what you want to invest in and then instruct us to invest in it. Bear in mind that we're not a broker-dealer, so at this time we don't have a platform for investing in publicly traded stocks, bonds, mutual funds. But the owner of our company recently formed a new trust company called the Entrust Trust Company. You may have heard that. We're going to be working on putting a platform in place to allow our investors to be able to have the option to also put any undirected cash into stocks, bonds, mutual funds. But right now, you would have to find some non-traditional asset to invest in, or if you want to put it into stocks, bonds, mutual funds, you'd have to transfer it back to an IRA with a traditional brokerage firm or E-Trade or Scottrade or some online trading platform like that. Can review upfront fees, annual fees, transaction fees. I'm sorry, just go to our website that we have our fees listed on there. If you really want the fees, you can email me and I'll email you our fee disclosure form. What if you buy property in Mexico? Same rules apply with IRA, but need to set it up with LLC. Yeah, Mexico requires you to set up an entity that's, I forget what it's called, something DCMO or something. There's a type of entity that you need to establish in Mexico in order to invest in property in Mexico through your IRA. So it's the equivalent of an LLC, similar to an LLC, but it's established in Mexico. So you can buy property in Mexico. You're just going to need to do it through that entity. Next question, since the property will be in the IRA, will I have to pay taxes on the rental income that it receives? No. You're not paying the taxes because you're not receiving the income. The retirement account is receiving the income. So you're not reporting that income on your taxes because you're not receiving the income. The retirement account is receiving the income. So it's the same way as if you held a stock in a publicly traded company that paid a dividend and your IRA owned it. That dividend goes directly into your retirement account, or a mutual fund that's receiving dividends. Those dividends go directly back into that fund, back into your IRA. So no, you don't have to pay taxes on the rental income that it receives. You only pay taxes when you take a distribution from your retirement account, and that assumes it's not a Roth. So your only tax consequences are when you take a withdrawal or distribution from your account. Are there any penalties for transferring? No. IRA to IRA transfers, there are no penalties. What is the difference between an administrator and custodian, which is Entrust? A custodian, to be a custodian, you have to be a trust company. If you are an administrator, then you are just you provide all the administrative services, and then you partner with a custodian who acts as the trust company, acts as the custodian. Which is Entrust? The Entrust Group is the administrator of your account. The Entrust Trust Company is the custodian of your account. So we have really two different companies that are owned by the same owner. So the Entrust Trust Company, which is a new trust company for us. The Entrust Group has existed as administrator for a long time. We used to use a different company as custodian until we formed our own trust company recently. So Entrust, if you just stop with which is Entrust, we are both the administrator and custodian. The Entrust Group is administrator, Entrust Trust Company is the custodian. Okay, another fees question. Please refer to our fee schedule. How's your business making money? I'll answer that question though. In our industry, we make money two ways. We charge fees, and we make a little bit of interest on the undirected cash that we hold. So so our fees are listed on our website on our fee disclosure form. But we also, and again, this is not unique to Entrust. This is everybody in our industry. So we have like $3.3 billion in investor assets, right? We have a 250 maybe $million. I'm not even sure exactly the dollar amount right now. What we do is we take a percentage of that, like 80–90% of that $250 to $300 million that we have, and we buy CDs. So 1, 2, 3, 4, 5-year CDs, et cetera. And then we keep the interest, right? So we make a little interest on the cash that we hold. So we keep a pretty high, 10% or so, 10–15%, just as cash for processing transaction that flows in and out, and the rest we buy CDs. That's the only thing we invest in, CDs. We don't. So all of the money that we hold is fully FDIC insured, right? So if somebody has $1 million with us, that $1 million isn't held in one account. It's held in as a percentage holding in all of our different bank accounts. So that $1 million is fully FDIC insured. CDs are fully FDIC insured. We don't put it into anything else, but we do make a little bit of interest. And again, that's not unique to Entrust. That's how the industry operates. If a property is rented and payments go to the IRA, do you notify us if you do not receive rental payments? No. We're not responsible for managing your property. We simply process the transactions as they come in and go out. So if you're not receiving rental payments, it's up to you to track that. Now you can log into your account and see transactions that are happening, and you can keep an eye on whether recent rental payments are coming in, but it's your responsibility to track that and follow up with your renter if they're not making payments. Can I sell real estate assets on a land contract and sell or finance them to an IRA? Can you sell real estate assets on a land contract and sell or finance them in an IRA? You know what? I don't think I know enough about real estate to understand what exactly you're wanting to transact there. So, Joe, you might have to give me a call and explain to me how exactly that works, and then I can tell you if you can or can't do it. But when I see can I sell real estate, that means that you're saying you're selling the real estate and then sell or finance them in an IRA. I mean, your IRA can lend money, but it can't lend money on a property that you're personally receiving some kind of, like on an asset property you personally own. So my answer to that question is I would say probably no, but I'm not sure I entirely understand how that would transact. So we'd probably need to have a conversation with that. So you can, there's my phone number, Joe. Give me a call and we can talk about it. If I lease a condo to a non-family member and then a family member later comes to live in the condo with a non-family member, think girlfriend and son, is that a prohibited transaction? Well, so just to clarify, family member by definition, just as a global sense, is not a disqualified person. Like your siblings are not considered disqualified persons, nor are aunts, uncles, cousins, nieces, nephews, et cetera, et cetera. So it's specific family members. Your spouse, your spouse, your ancestors, so parents, grandparents, great-grandparents, lineal descendants, children, grandchildren, great-grandchildren, and spouses of lineal descendants, right? So to answer your question, if you have a non-disqualified third party living in the property and eventually a disqualified person becomes, let's say a girlfriend becomes a spouse, but you're going to keep your own home separately, just as an example, then yes, once they become your spouse, that's now a prohibited transaction. They have to move out. So if you have a certain individual that's living in the property that for whatever reason becomes a disqualified person through some kind of marriage arrangement typically, then yes, that person would have to move out of the house or you'd have to sell the house. Next question, could I use my Entrust account to pay only a down payment and then get a mortgage for the rest of the property purchase? Who then would qualify as the borrower? Would I have to get a hard money mortgage due to lead? So you're not allowed to use your IRA as a down payment for you personally to borrow money. So that just off the bat, the IRA is its own entity, and if the IRA can partner, you can partner with your IRA where your IRA owns a certain percentage of the property and you own the rest of the property. And if you can find a lender who's willing to lend to you as a percentage owner of a property, but you can't use your IRA or any money from your IRA as collateral or down payment for you personally to borrow the money. Those are two separate things, and by definition, your IRA can't be used as collateral for you personally to borrow money or as a down payment for you personally to borrow money. How quickly could I roll over my individual 401k into Entrust 401k and Roth time frame the existing 401k has a loan? Well, first of all, you would transfer your 401k into a 401k. You would roll over your 401k into a Roth, just to be pedantic about the wording here. It depends upon the other custodian. It typically takes about 5 to 7 business days for most transfers or rollovers to happen, but it varies depending upon your current 401k custodian. I've seen it happen as quick as a couple days. I've even seen it take as long as a couple of weeks. Who physically holds precious metals when purchased via Entrust? They have to be held at a depository. So you would purchase the metals. You would instruct us to purchase the metals from a dealer, and then the dealer would ship them to a depository of your choosing. So it has to be like a registered depository. There are certain depositories that hold precious metals on behalf of IRAs. You would have to pick one. Can I take the property back from my IRA as a distribution over multiple years? Yes, you can. That's a great question. You can take a distribution of an asset inside your retirement account, and you don't have to take a distribution of 100% of the asset. So if you hold a property, for example, that's valued at $100,000, you could take, for example, $20,000, 20% or $20,000 worth of the property for 5 years until you have full ownership. And just to add some to that, each time you take a distribution, you're now changing ownership of the property, which means you'd have to go to the county, you'd have to retitle the property, right? So let's say you take 20% of the value of the property. You now have to go and you have to re-register the asset that was once owned 100% by the IRA, is now owned 80% by the IRA and 20% by you personally. So there has to be, quitclaim deed or something. You'd have to do the paperwork to change ownership. And then if the next year you took another distribution, you have to go and you have to change ownership. Each time you take a percentage of the property as a distribution, you have to change the title that's held on that property. Next question, can I sell the property at any time? Sure. Your IRA is selling the property, by the way, not you, but sure. You don't have to hold it for any amount of time. Sell it whenever you feel like you want to make a profit on it. Can I combine the funds from mine and my wife's simple IRA to buy property? Yes, you can. That's called partnering. It's an industry term. Don't perceive that as a legal term. Partnering your IRA just means combining your IRA with other sources of income. So your IRA would be a percentage owner, and your wife's IRA would be a percentage owner based on the amount of money that each IRA is contributing to the property, which means each IRA receives its percentage of the revenue, and each IRA is responsible for its percentage of any expenses. Can I loan my IRA money to a real estate LLC and have my loan backed by the real estate? Sure. As long as the real estate LLC isn't a disqualified person. So as long as that real estate LLC isn't your own LLC. But if it's somebody else's LLC, yeah, you absolutely can. Your IRA can loan money to an entity, and you guys will decide what you want to use as collateral. It's up to you to decide. You and the borrower decide how you want to collateralize the loan, if you want to collateralize the loan. If I can take the land out of the IRA as a distribution, can I then replace the value of the land into another IRA as a 6-day rollover? Yes, you can. Yes, that is the short answer to your question. What is the return on your money until you find a property? You have no return on your money. It sits in cash until you find an investment. It's going to sit in cash until you instruct us until you invest it in something. Does the self-directed IRA need to be funded through a rollover of another IRA or 401k only, or can it be funded through money from a checking savings account? You can make an annual contribution to your retirement account. That contribution is limited by what the IRS allows based on the type of retirement account and your income, right? But I mean, an account with us, a self-directed IRA, is still an IRA. It's still a traditional IRA or a Roth, or it's still a 401k, and therefore, it allows for annual contributions. You can make a contribution to your retirement account. But it has to be, if you're asking, can you purchase a property using your savings account and then decide to transfer it into your IRA in some way? No. Your IRA has to have the cash, and the cash in the IRA buys the property. But you can fund your account through a rollover or a transfer or an annual contribution. Next question, can you create an LLC and have husband and wife both be owners of the LLC? Is this a way to combine spouse funds? I'm assuming when you say husband and wife, you're saying husband and wife's IRAs. But yes, that is a great way to combine funds from different sources, including your IRA and your spouse's IRA or your own savings account. So each of you or each of your IRAs would be members of the LLC based on the amount of money that each is contributing. If it's each of your IRA and you're doing 50-50, then you would each be 50% members of the LLC. If you did 70-30, then 70-30 members of the LLC. Again, partnering is the term that we use in the industry. You're partnering your IRA with other sources of funds, or you are partnering your IRAs together. Can I loan money to my IRA to make a real estate purchase, and can the IRA pay me back with the rents received? No. You're not allowed to. You are a disqualified person. You can't loan to your IRA. Your IRA can borrow money, but the IRA has to borrow the money from a non-disqualified third party. Can I use something like PayPal to collect the rent and forward it directly to Entrust? It's a good question. So that's a good question. I mean, if you establish, that's iffy. I would say that's an iffy proposition to do it that way, because you're taking personal possession of those funds by using that PayPal account. And any money, I mean, if you set up a PayPal account that is set up under the name of your IRA, so it can't be associated with your bank account or your credit card or any way, I'm going to give that a maybe on that. It's a good question. I'm not 100% sure. We'd have to talk to our compliance manager and maybe even like how PayPal, get into like how specifically PayPal would work in that instance. But like if it's a PayPal that's under your specific name, your personal name, or is associated with your own bank account in some way, definitely not. But there might be a way to utilize PayPal to be able to do that. The next question, is traditional IRA better for commercial property than Roth as far as taxes? I mean, a traditional IRA grows tax deferred. It's a pre-tax contribution so you get a deduction of your income. So you get a tax break when you make the contribution, but it grows tax deferred, which means at some point when you take a distribution, you're going to have to pay taxes on it. A Roth, when you make a contribution, you don't get an immediate tax benefit. You don't lower your taxable income, so you're contributing post-tax dollars, but it grows tax-free. You don't ever have to pay taxes on the earnings as long as you've had a Roth for at least 5 years and you're over the age of 59.5. As to which is better for you for commercial investment, that's a personal decision. Can self-directed investments in development LLCs, can a self-directed IRA invest in development LLC which has more than one member? Yeah, absolutely. That's probably one of the most popular investment types in our industry, is investing in syndications, which the LLC isn't bringing in, maybe 50 or 100 investors that are all going to own 1 or 2 or 3% of the investment. They turn around and buy some kind of big apartment complex, or building a building or something like that. That's very popular. Yeah, you can certainly do that. Could a relative as an individual be a PM and get paid directly rather than through a PM company? All right, so when I see PM, that to me means precious metals. So I'm not sure. Let's see. I don't know what PM means here. Sorry.
I think they're talking about property manager.
Oh, good. Okay. Could a relative as an individual be a property manager and get paid directly rather than through a property management company? Sure, as long as the relative isn't a disqualified person, as long as the property manager isn't you, your spouse, your ancestors, or your lineal descendants. They can't be a property manager and be paid. But a sibling, aunts, uncles, cousins, nieces, nephews, they can all be property managers. They're not disqualified persons. Your IRA can pay them, or they can be paid through a property management company. If land property tax was paid out of pocket, all right, first of all, it can't be. If land property tax is paid out of pocket rather than from the cash holdings within the self-directed IRA, can that be reimbursed later from the cash holdings part of the self-directed IRA? The answer to that is no. You'd have to be reimbursed. You would have to be reimbursed by whoever you paid that property tax to and have the property tax paid by the IRA. The simple act of paying the property tax out of pocket means that you've created a prohibited transaction and you now put your entire IRA at risk. So don't ever do that. Just send us the bill and we'll pay it. But if you did ever pay for any expense associated with with a property held inside your retirement account, whether you paid a contractor or whether you paid taxes or something like that, the only way to make that right is whoever you paid that money to has to reimburse you. And then you have to pay it directly from the IRA to, in this case, the county or state, or if you have a contractor, the contractor. Can my Roth and my wife's Roth partner to fund an LLC to buy property? Yes. Can the LLC then borrow money to help pay for the property and its fix-up costs? Yes. If so, please explain UBIT, giving a hypothetical example. That is, buy a rental property for $250,000 with $50,000 down and note for $200K plus note for $25K for improvements. All right, I'll give you a hypothetical for UBIT, but I'm not going to use the numbers you gave you because that's too complicated to try and come up with the percentages. Let's say you have an LLC where you've partnered you and your wife's Roth, and you put in you come up with 50% of the money. So let's say it's a $200,000 property. You have $100,000 in the LLC, and the LLC borrows the other $100,000, right? So, and then you go and buy the property, and you have earned income. You have net. I'm sorry, not earned income. You have net income after expenses of $10,000 in that property, right? So the LLC made $10,000 on that property net after expenses for that year, and you had 50% borrowed money. That means 50% of that $10,000 or $5,000 is subject to UBIT, unrelated business income tax. Actually, it's unrelated debt financed income tax, which is it's the same thing. It's the opposite sides of the same coin. UBIT is when you're running a company inside your business. Unrelated UDFI is when you're using leverage, when you're using borrowed money, right? So your IRA is subject to UBIT or UDFI, in this case UDFI, based on the percentage of the total ownership of that property that was borrowed. Okay, so if you borrow $25,000 in your case for improvements, and that impacts the value, so you have a fair market value of the property, that $25,000 represents a percentage of the fair market value. If you have net income, then whatever that percentage is, your IRA is going to have to pay some tax based on that percentage. Okay. Must the fees be paid to Entrust come from the IRA, or can the fees be paid from non-IRA assets? They can be paid from non-IRA assets. You can either pay them debiting from the account, or you can provide us a credit card and we'll pay from the credit card. How do I do a distribution in kind at $59.5 from my self-directed IRA LLC? You fill out a distribution form and request a distribution and tell us that you're taking the asset in kind. We'll issue a 1099 to you and to the IRS, informing you and the IRS that we distributed the asset to you. You then have to change ownership of that asset. So if it's a property and we've distributed it to you, you have to go to the county and do whatever paperwork needs to be done to change ownership from the IRA to you personally. How do you handle minimum distributions that are required, or otherwise known as RMD, when you turn 70.5? Do appraisals need to be done annually to determine value of overall assets? So if you're taking a distribution of an asset, so if you're RMD, if you're subject to RMD and you want to take the asset as a distribution, or a percentage of the asset as a distribution, or the value of an asset as a distribution, we do need an appraisal. And then we would distribute, so you would tell us what you want distributed. If your RMD is $40,000 and that represents 5% of the value of your property, then we would we're distributing $40,000 to you, but we're distributing $40,000 worth of value of the property, and whatever the value of the property is, whatever percentage that represents, you have to go and you have to change ownership of the title that's held on that property to your new percentage based on the distribution to you. Can more than one member form the LLC to buy a business? Sure. Lots of people do that. Is there a requirement to maintain a minimum balance within an Entrust account? No. We don't have a minimum balance requirement. Is a company owned by a relative considered a prohibited transaction? Again, it depends upon the relative. If it's a spouse, an ancestor, or lineal descendant, or a spouse of a lineal descendant, so son-in-law, daughter-in-law, something like that, the answer is yes. That would be prohibited transaction. If it's another relative, like an aunt, uncle, cousin, niece, nephew, sibling, those are not disqualified persons, and therefore would not be considered a prohibited transaction. I'm 63 years old. When do I need to take distributions? Is it worth growing an account with real estate at this point? You have to take You're required to take minimum distributions at the age of 70 and a half. As to whether it's worth growing I mean, it's always worth growing an account. Whether it's worth growing an account with real estate at this point, I mean, talk to a realtor, they'd say yes. I suggest that you talk to any, financial advisors, CPAs, or maybe, if you have any realtor friends in your life, ask them about what they think real estate's going to do over the next 7.5 years. So yeah, okay. Thanks for answering the above. As a follow-up, any rents paid to the LLC have to be deposited into the IRA LLC. Do these rent checks get sent to Entrust? So you're right. If you're utilizing an LLC as the entity that owns the property, the rent has to be paid directly to the LLC. Once the cash is in the LLC, it's up to you to decide whether you want to transfer that money back to the IRA now, whether you want to keep it in the LLC for maybe investing in other stuff or just having it in the LLC to pay other expenses that you might have. If you decide you want to transfer it back to the IRA, you can take it out as a distribution at that point, or you can transfer it back to, if you have an account with a traditional brokerage firm that you want to put it into stocks, bonds, and mutual funds. Of course, you could use the LLC to invest in stocks, bonds, mutual funds. I guess my point is that once it's back in it has to flow from the LLC or from the tenants to the LLC. And then if you want that cash, if you want to take that cash personally, it has to flow back to the IRA from the LLC. But there's no time frame in which you have to send it from the LLC back to the IRA. You can keep it in the LLC for as long as you want. You just can't use it personally in the LLC. You can't go and buy groceries with it or buy a car or take it as a personal withdrawal from the LLC. It has to come back to the IRA first before you can take it as a personal withdrawal. Does pass-through taxation deductions apply for my rental properties in my IRA to my individual taxes? No. You don't own the property. Your IRA does. So the IRA receives the rent. The IRA pays the bills. And you're not doing anything. It's not you personally that owns it. So your personal taxes are not involved. The same way, I keep using this as the same example, the same way if you hold a mutual fund or a stock inside your IRA, you're not processing anything on your personal taxes from if your stock grows or if it receives dividends or if a mutual fund grows or receives dividends, there's nothing that's being passed through onto your personal taxes because it's all occurring inside a tax sheltered vehicle. So no, you don't. When anything that happens on real estate owned inside your retirement account is strictly happening inside your retirement account. It has nothing to do with your personal taxes. Next question, when writing a contract, how do you identify the buyer? How is the buyer's name entered into the contract? Right? How do you identify the buyer? Oh, so the Entrust Group, FBO, your name, and your Entrust account number. Sorry, I got confused for a second there. So the name of your account will be the Entrust Group, assuming it's with Entrust, and then FBO, which stands for benefit of, then your name, and then IRA number, and then whatever your 10-digit account number ends up being with Entrust. That's the entity that goes on the contract, all the closing documents, and on title. Next question, do you make investors with people that have real estate opportunities? Okay, so no, we don't do that. However, we are about to release, we may have even released it already, I have to look, but if you have an account with us and if you log into your account, you're now going to see a new button up there that says Marketplace. And this is a list of a marketplace of potential investment opportunities that other Entrust account holders have invested in. That they are all like private funds, private placement, LLC type investments. Some of them might invest in real estate. There's syndication. Some of them invest in cryptocurrency. But these are, so we don't match investors. If you called us up and said, hey, can you hook me up with somebody that process investments for you? We don't do that. Except we are now creating this marketplace of potential investment opportunities. So keep an eye out whenever you log into your account. It's only available to our existing account holders, but when you establish an account, you'll see the button for Marketplace and click on that. If it's not up yet, it might not be up yet, but it's going to be up really soon. Like really soon as in before the end of June for sure. Next question. So you participate in the CDARS program for cash. I'm sorry, I don't know what that is. Next question, could you elaborate on lending against a first deed out of California and different laws? Your IRA can lend money. So if you want to lend from your IRA and hold a first deed of trust on a property that's in California, you're allowed to do that. In terms of all the laws associated with it, I don't have that expertise, I'm sorry. If an IRA is next question, if an IRA is invested in an LLC that has debt and is subject to UDFI, unrelated debt financed income tax, does the individual or the IRA end up paying the tax on such income? The IRA does. That's a really good question. The IRA is subject to, the IRA receives the revenue, well, okay, let me rephrase that. In this case, the LLC would pay it, right? You said if an IRA is invested in an LLC that has debt and is subject to UDFI, does the individual or the IRA end up paying the tax on such income? I mean, if it's 100% owned by, sorry, the IRA would pay it, not the LLC. Yeah, you would submit a Form 990T to Entrust, and Entrust would have to pay that UDFI out of your account. Next question, how does this work with inherited property that is currently being rented and considered an investment property? With inherited property, I mean, if you're talking about if you inherited an IRA that holds real estate, then you inherited the IRA, and your IRA now, you're now the beneficiary, you're now the owner of that retirement account that holds the investment property. But if you're saying that you inherited property and it's being rented and you want to put that into your IRA, you can't. That's a prohibited transaction. But again, if you're talking about an inherited IRA, well, if you inherited that IRA, you inherited all the assets in it. And which means you now can sell it if you want to, or you consider to have it, continue to have it rented out and receiving that investment income, but that money continues to be paid directly to the retirement account that you inherited. Next question, can my self-directed IRA fund an LLC with my wife's self-directed IRA and my son's Roth self-directed IRA and have the LLC buy one or more properties? You absolutely can do that. Just make sure that you partner all those IRAs into the LLC at the same time, right? If you set up an LLC in which your self-directed IRA is the owner and you decide later on that you want to add your wife's or your son's Roth IRAs, it's too late. You can't, once you've established the LLC under your IRA, you can no longer just add another, what would be a disqualified person. They have to be done at the time that you establish the LLC. Follow-up. And can we add funds to that LLC in accordance with initial percentage participation? Yes. And that's how you have to do it. You have to add funds in accordance with the initial percentage participation. Next question, can the funds of two or more Roth IRAs belonging to the same person be moved into one self-directed IRAs? Sure. Yeah. A lot of people who fund accounts with us, they bring money in from multiple different accounts. As long as they're both Roths, they can be put in the account, the same account. If you also have a traditional IRA or some other pre-tax account, then that has to be in its own account, but the Roths can be combined into one. Next question is partnering IRA the same as an LLC? No. You can partner your IRAs into an LLC, or you can partner your IRAs into one property if you want. Partnering just means that you're combining your IRA with other investors. An LLC is an entity, a pass-through entity that allows you to have checkbook control over your IRA. But you can also partner your IRAs into an LLC if you want. So partnering, people oftentimes will partner multiple IRAs into one LLC. So from that standpoint, it's a very common thing, but you're talking about it's two different things. Partnering an IRA is combining your IRA with other sources of funds, and an LLC is an entity that allows you to have checkbook control over the money. How do you handle personal liability insurance coverage on a house or condo owned by an IRA? Well, the IRA has to be the entity that is the insuree, that is the beneficiary. So there is no personal liability insurance. The liability insurance is established under the IRA, and the IRA pays the premiums on that insurance. So you don't establish liability insurance under your personal name. You establish liability under insurance under the name of the IRA. We have to review, and that insurance has to come to us. If it needs a signature, we sign it on behalf of the IRA, and then we send the payment from the IRA to the insurance company. 3 more questions. I have a 2-member LLC set up for real estate purchases. Can I now add my and my wife's Roth IRAs as additional members proportionally to their cash investments? No. If so, if the LLC then wants to borrow additional funds to buy in or improve a property, how does the non-recourse loan required impact the LLC as a whole? So since you already have that LLC set up as under your own name, you can no longer add your and your wife's IRAs to that LLC. If you wanted to have your, have an LLC in which you're two, well, you said I have a 2-member LLC set up for real estate purchases. I'm assuming that you are one of the 2 members, right? So that's why I'm answering it this way. Now, if the 2 members are 2 other completely separate people from you and your spouse, then yes, you could add your IRAs to that. But again, I'm working off the assumption that the 2-member LLC is including at least you as the member. And since you already have yourself as the member of that LLC, you can no longer add disqualified persons as new members. Or you can no longer add your IRAs because you're a disqualified person, so the IRA can't come in. You'd have to establish a whole new LLC in which you and your 2 members plus your LLCs, or I'm sorry, your IRAs would be established as the members up front, right? So let's assume you do that. Now I'm going to answer the second part of the question. The LLC that wants to borrow additional funds to buy into or improve a property, how does the non-recourse loan requirement impact the LLC as a whole? Since IRA money is part of the owners of that LLC, it has to be a non-recourse loan. Okay, I missed your response to this question. If I can take the land out of the IRA as a distribution, can I then replace the value of the land into another IRA as a 60-day rollover? The answer to that is yes. You can't replace, okay, I probably didn't answer this right the first time. You can't replace the value of the land into another IRA. You can roll over that land into, so if you take it as a distribution, you have 60 days to roll that asset over into a new account. So you can't simply, if you're saying replace the value, can you take it as a distribution and replace the value by putting cash in? No. You can roll over the asset. That's it. So if you take a distribution of an asset, you have to, and you don't want to be taxed on it, you have to roll over that asset back into another account. You can't just replace the value by putting some other land or cash into the new account. What does UDFI and UBIT mean again? UDFI is unrelated debt financed income tax, and UBIT is unrelated business income tax. They're opposite sides of the same coin, but essentially your IRA can be subject to a tax depending upon if you're using leverage or your IRA is owning a business. Okay, last question. Who can manage the partnering LLC? Anybody can manage it. But if the manager is a disqualified person, so is one of the account holders of the IRA, then you can't receive any kind of income or expense reimbursement for being the manager. But from a standpoint of an LLC, the manager maybe controls the checks, decides where the investments are going to be made, that type of thing. Anybody can be the manager, just not anybody can receive compensation for being the manager, and only a non-disqualified third party can receive compensation. Okay, 1 hour and 15 minutes. Thank you all for joining. Always a pleasure.